And Mahindra's news flashing on your screens, the Q3 numbers that they have really delivered at this particular time. EBITDA 5293 crore rupees. It is lower than the street estimates. The revenues are up 26% for the company at 38,500 odd crore rupees. And when we talk about the EBITDA performance, that's up by over 20% for the company at 5,200 odd crore rupees. The EBITDA margins at 13.7% versus 14.4% YOY. So there is a substantial dip when it comes to the profitability figure or EBITDA margin figure. Profit is up 32.5% for the company at 3,931 crore rupees. Also take a look at this particular counter. It is up over 1% in trade, revenue at 38,517 odd crore rupees. The estimate was higher than what the street was expecting, and therefore from the top of the trading for M&M, it has really dropped after it's digesting the numbers really trickling in, but still holding above the 1% gain at this particular point. I would look at the profitability figure where the margins have dropped for the company, and also take a look at the particular counter in terms of the share price movement as part of the reaction to the results coming in. In fact, our auto expert researcher Puneet is right here with us to give us a sense on prima facie how do these numbers show up. Puneet.
Well, thank you for that. So the revenue and the profit number have largely come in line with the expectations that we were working with. Now, we had some evidence of the strong volume growth that we've seen for M&M, both in tractors as well as in the passenger vehicle side. So you did see both those aspects of 23% volume growth, and that has translated into the numbers for both revenue as well as for profitability as well. There's also a 98 crore labor code impact which has impacted profitability. So despite that, at almost 3,900 odd crores in terms of profits, 3,931 crores to be specific in terms of profits, that number has largely come in line with the estimates that we were working with. In terms of margins, and the other expenses have been slightly inched up is what I was seeing at 2,100 odd crores. Of course, on a quarter-on-quarter basis, it is slight inch up as well. It was expected to be a little higher given the number of launches that we've seen in this particular quarter. So quarter 3 had the launch of the 9S in November, and hence some costs would have inched up, and it's similar that the number would come here as well. But largely the number of other expenses also in line of 2,100 to 2,200 odd crores in terms of that number. But in terms of revenue as well as profitability, those both numbers seem to be in line with the number that we were working with as well. So it seems to be an inline set of numbers in terms of a review of both those key aspects. Some commentary on the bookings number will be something I'll be definitely watching out for, because all automakers are now facing essentially a very high utilization in their plants. So capacity is a constraint. Definitely all of them, including M&M, have announced new capacity. So it will be something to watch in terms of what the booking numbers go, because that has a subsequent direct impact on waiting periods for all these models as well. So continue monitoring that. But in terms of results, this is the key aspect.
All right, Puneet, thank you so much for giving us the key highlights of the results that have been announced by Mahindra. But take a look at this particular counter. In fact, it has lost about 70 rupees from the top since the results came out. Let's take it straight across to an expert, Mayuresh Joshi, who's from MarketSmith India, Mumbai, joining us now. Mayuresh, what do you make of these numbers? Considerable fall in the stock price after the results have been declared. Pretty much in line with what we really expected, and volumes game have really backed the performance this particular quarter. What's your take on it?
Very good afternoon. I think numbers more or less in line with estimates, specifically in terms of how the top line was expected to be. Volumes have remained strong for the quarter gone by, both in terms of the automotive business as well as the farm equipment business. And therefore, I think the labor code impact to a certain extent would have hit the effect margins. As Puneet rightly mentioned, I think there were a few key launches that also happened in quarter 3. So that would have also taken some element of a toll in terms of other expenses going higher, which in turn has probably impacted the EBIT margins, specifically on the automotive business. And that is where I think the impact is coming from. And it's up to the management commentary in terms of how they are looking at the macro stroke micro environment, expectations of new launches and expectations in terms of the margin profile going forward.
Right. So a few of those aspects that you mentioned, especially the management commentary on the overall micro and macro environment for auto sales is an important bit. But Mayuresh, you also mentioned that the labor code impact would have hit the profitability of the company, but pretty much in line. When it comes to the bookings projection and the pipeline going forward for both tractor as well as the passenger vehicles, what are you expecting from the company, and what is your sense that really played out in this quarter and a sense for the present quarter which is going on?
So they're still retaining the leadership position, right? They're still the number one in SUVs. They've got a revenue market share of almost 24%. They're number one in tractors with a market share at 44%. In LCV, which is less than 3.5 tonners, they've got a market share in excess of 50%. So I think the new launches in the areas that they're operating out of and the leadership that they've probably got, that should very well continue. However, I think what probably goes through in terms of the premiumization aspect, I think that is largely getting gestated by the market. The consistency in terms of volume stroke value growth is going to be extremely critical as we head into the next few quarters. I think the management commentary, at least on the press release, sounds very, very positive as we see it. And therefore, I think let's see in terms of the concord, in terms of all these key aspects on the exact metrics that it's probably out.
Right. So value versus volume play and projection on that from the management is going to be critical. Mayuresh, before I let you go, prima facie with these numbers, what's the sense on re-rating this particular counter? Does it call for a re-rating from the present levels where it's at about 3,700 odd rupees per share?
I think numbers more or less in line with estimates. Again, I think, as I said, it's maintaining its leadership position. There are also competitive launches happening in all the areas that we're probably looking at. For competition intensity, how do they tackle that, both in terms of pricing, the key features that probably are going to get offered at the price points that they're probably going to offer their forthcoming models as well, and input cost variations. How does that have an impact in terms of input margins, absorption of the same and pass through? If that does take place in the next few quarters, I think all these aspects will be watched out for. But to a large extent, I think the stock has gestated a large part of the positives, but it still remains the market leader in the SUV tractors less than 3.5 ton segment, which is a huge positive for the company.
All right, Mayuresh, thanks so much for joining in. And of course, the management commentary on Mahindra & Mahindra